Good afternoon and welcome to NYFB. The major U.S. stock averages are trading on a mixed note ahead of the Fed announcement. Now I'm joined by Todd Schoenberger of LandColt Trading. Hi Todd, thanks for joining me.
Thanks for having me, Remy.
Well, all eyes are on the Fed announcement, which will be released within the next 2 hours. And ahead of that, we've seen mixed trading in terms of the equity markets. How much of the expected Fed decision do you think is already priced into the market?
Oh, 100% I would say right now. I mean, first of all, you have a market that's really anticipating something blockbuster from the Fed chairman today. And I don't think we're going to get it. I mean, the sad thing about it is that this is a Federal Reserve that continues to act alone and needs to act alone. Unfortunately, Washington's not backing them up. I mean, remember, the Fed cut interest rates 7 times, handled the default of Bear Stearns before Washington did anything, and now they're expecting, and I think the world is expecting, traders here on the floor are expecting Chairman Bernanke to issue something that's just going to be so blockbuster, but there's really nothing there that's going to be there that's going to really help us propel further and propel higher. I think we're going to be in for a pretty big sell-off when this announcement comes out in a couple of hours.
Well, what about the tech sector, Todd? Earlier today, we did get announcements out from a couple tech names based on dividends as well as earnings, and we also got word out from HP today. But do you think we'll see a pullback in that sector?
I'm not so sure, and I'll tell you why. A couple of things here. One, HP, the breaking news that just came out a little while ago was that they're talking to Meg Whitman about taking over that company. That's a big name right there. Big name story for Hewlett-Packard, especially for a company that seems to be stuck in quicksand. That's great for them. Number 2, the big news, Apple possibly going into the Dow 30. The question will be who will they replace, but that is a blockbuster news because, and they should be in there, first of all, but number 2, it's great for investors, great for Apple shareholders, and really great for the market. I mean, I think it will really bring a little bit more of excitement, something we've been missing here on the floor for a while.
Okay, Todd, last but not least, before we wrap it up for today's interview, I do want to shift our focus on over to the Eurozone.
Yeah.
Now, we continue to get more development and news out from the region, but going forward, how have you positioned yourself?
Well, listen, the Eurozone, I've said it before with you, is that the Eurozone is a time bomb. So you have to only suspect that something massive is going to happen. You can have the EU, you can have the IMF, you can have everybody involved trying to bail out Greece, Italy, Spain, Portugal, everything that's there. The problem is that we are impacted greatly if any of those countries default, only because our banks are obviously lending to French banks who then in turn lend to those countries. So that's one issue. Number 2, counterparty risk. Number 3, trading revenues. Remember, this is a global trading environment right now that will impact U.S. banks, financials here, which obviously could lead to markets lower. Look, this is a great, there's quite a concern here in the U.S., mainly on the floor here. A lot of people, a lot of the traders that I've been talking to, they're very concerned about what's going on in the Eurozone, only because it can negatively impact us, not just in the short term, but really going into well past 2012 into 2013, only because of the credit constraints and everything that's out there. I really hope they get their act together. I don't really know what they can do, though. It's just a tremendous amount of debt there, but something's got to be done, and hopefully somebody has the magic bullet. I haven't heard it yet.
Okay, Todd, as always, thank you so much for joining me, and thanks for weighing in on all these topics ahead of the Fed.
You got it, Remy. Thank you.